Portfolio construction is like preparing for a journey. You need the right balance of supplies to withstand uncertain conditions. Today's investors allocate assets across stocks, bonds, and alternative investments. In pre-colonial Agikuyu society, traders, farmers, and warriors carefully allocated their resources, ensuring wealth, security, and growth. Whether managing a financial portfolio or a household economy, the rules remain the same. Let's explore smart beta, blended funds, safe bonds, traditional portfolio strategies, and ESG investing, and how the Agikuyu mastered these principles long before modern finance. Smart beta isn't about blindly following the market. It's about strategic selection. Investors use factors like value, momentum, and quality to enhance returns. The Agikuyu did the same in trade. Goats were a key form of wealth, but choosing the right one required deep knowledge. Traders observed which breeds thrived over generations. They selected goats with a strong lineage that would produce valuable offspring. They assessed overall health and adaptability, ensuring long-term trading value. Just as investors today optimize portfolios using smart beta, Agikuyu traders built sustainable wealth through selective trade practices. Some investors don't want to pick stocks. Instead, they invest in blended funds prepackaged for stability. Balanced funds hold a mix of stocks and bonds. Target date funds shift their risk levels over time. The Agikuyu had a similar approach to farming and trade. No one relied on a single crop or one type of livestock. Instead, families balanced their assets. They cultivated fast-growing crops like beans for immediate consumption, drought-resistant grains for long-term security, and livestock that could be used in trade. Much like today's blended funds, Agikuyu investment strategies ensured resilience and long-term prosperity. Bonds are the stabilizers of a portfolio, providing security when markets fluctuate. Investors hold treasury bonds, which are low risk and backed by the government. Municipal bonds, issued by local governments, often tax-free. Corporate bonds, which carry higher risk but offer better returns. Agikuyu traders took the same approach. While some gambled on high-risk, high-reward livestock trades, others secured their wealth in steady grain exchanges, bartering millet, honey, and tobacco, which held consistent demand. Just as bonds offer investors stability, grain trade protected Agikuyu wealth during uncertain times. For decades, investors have followed a structured approach to portfolio management, balancing risk and stability. While financial markets now use specific ratios to achieve this balance, Agikuyu families followed a different yet equally effective strategy. In times of abundance, households preserved their wealth by storing surplus grain in granaries, ensuring food security during difficult seasons. A portion of livestock was kept for trade, providing liquidity when sudden needs arose. Investments in tools, beads, and ironwork were carefully chosen, as these items could be exchanged for essentials or used in bride price negotiations. Like modern portfolio managers balancing asset classes, Agikuyu families diversified their wealth across different resources, ensuring resilience against uncertainty. Modern investors increasingly focus on ESG investing, ensuring that wealth is built responsibly. Environmental factors consider sustainability and climate impact. Social factors focus on ethical treatment of workers and communities. Governance assesses leadership and accountability. The Agikuyu practiced ESG principles long before corporations adopted them. Farming was done with the land in mind. Crop rotation ensured that soil remained fertile, and overgrazing was discouraged to protect communal resources. Trade was regulated through council meetings, where disputes were settled fairly, ensuring that wealth circulated within the community rather than accumulating in the hands of a few. The idea is simple: wealth should be sustainable, not just profitable. Whether investing in stocks or livestock, portfolios or food reserves, the goal remains the same. Diversify wisely. Do not put all resources into one type of asset. Balance risk and reward. Some assets are for immediate needs, while others ensure long-term stability. Think ahead. True wealth planning extends beyond a single generation. Portfolio construction isn't just a modern concept, It's a philosophy that has existed for centuries. The best investors, like the best traders of the past, know how to prepare for tomorrow.